Over a month ago, I bought shares of Alibaba. It was my first direct position into Chinese markets via a variable interest entity. And even with the recent downturn in Chinese stocks, my investment thesis, it really hasn't changed. If anything, I'm really tempted to buy even more. There are some legendary investors that have bought Chinese stocks, which you'll see here soon. But my Alibaba position makes up close to 10% of my total portfolio. Instead, I'm now considering buying into a basket of Chinese stocks with one of the best China ETFs. After many hours of research, I've decided one of the best funds is iShares MSCI China ETF, ticker symbol MCHI. It's one of the largest Chinese ETFs with more than $6 billion in assets under management. It's been around since 2011 and also has one of the lowest expense ratios at 0.59%. For an international fund, that's pretty darn competitive. Unfortunately, Vanguard doesn't really have a comparable fund. I usually like Vanguard funds because they have some of the lowest expense ratios. A quick note, MCHI pays a small dividend. It does bounce around a bit, but it's just a plus nonetheless. The fund has about 600 positions, and its top 10 holdings make up just over 40% of the fund. It's market cap weighted. Both Alibaba and Tencent are just over 10%, so I would end up gaining more exposure to Alibaba, but I'm a lot more comfortable with this diversified approach. And Tencent is another company, it's been beaten down a lot, and I've considered buying into it directly as well. In the off chance there are more Chinese stock delistings, the fund is better positioned to maintain its holdings. That's partially because of its size, but also this China ETF invests directly into the Hong Kong listings, so that might help minimize some slight exchange risk. To start, let's look at big investors that are buying and selling Chinese stocks. A move by Charlie Munger initially caught my attention. This was a few months back, but there's been some other noteworthy comments since, from some names you'll likely recognize. And before we get into that investment insight, I'd really appreciate it if you just tap that like button down below, as well as subscribe. And for those of you that have subscribed and stuck around, I really appreciate the support. You guys can always drop comments down below. I read every single one. All right, so let's start out with the buyers. Charlie Munger bought into Alibaba earlier this year via the Daily Journal, where he's a chairman and portfolio manager. According to the company's past 13F filing, Alibaba made up roughly 17% of the equity portfolio that we could see. That's a large chunk of the Daily Journal. Although I do need to point out that it's small in comparison to Berkshire Hathaway. Nonetheless, this is a significant move from Charlie and a strong vote of confidence. He has an outstanding track record of success over many decades. He clearly thought, and likely still thinks, that the potential reward outweighs the geopolitical risk. Now, for another buyer, Mohnish Pabrai is lesser known, but is still a proven value investor that's taken a significant stake in Alibaba. I followed him a bit over the years, and he also has close ties to Charlie Munger. Mohnish has invested close to, I think, 15% of Pabrai Fund's equity portfolio in Alibaba, from what we can see. He also has been a bit more vocal on why he's willing to buy into certain Chinese stocks. In an interview when asked about Chinese regulatory issues, he said he thinks Alibaba is a crown jewel for China, along with Tencent. These companies have a global footprint for the country, and he doesn't think China will kill their golden goose. Regulators have recently extracted their pound of flesh, and he doesn't expect much more than what we've already seen, at least for these companies. Now, on the other side of the aisle, Cathie Wood has been dumping Chinese stocks, but I'm very hesitant to follow her investment strategy. She's gained popularity over the past few years with her big investment bets with ARK funds. They've paid off well for investors over the past few years, although I've been skeptical of her fund's long-term potential. Ben Carlson, on his blog A Wealth of Common Sense, has said, "ARK cannot outperform at this pace forever. There's bound to be a misstep, or the style will simply fall out of favor for a period of time. Many of the investors chasing the hot dot will head for the exits at that point." Looking deeper online, I found some more insight on Reddit. In Cathie Wood's 20-plus year performance history, she's generally underperformed equivalent style peers on a year-by-year basis. She also tends to leave funds during or following a period of underperformance, then reboots in another fund. So I'll continue to take her bold predictions and hype with a grain of salt. Now, one more big name opposed to Chinese stocks is Jim Cramer. I'm not sure on his real portfolio holdings these days, but he's recently said, "I think it's the height of irresponsibility to give Chinese stocks a second chance." But when it comes to investment advice, Jim Cramer is lacking in that department. Of course, he gives plenty of advice. He's a financial entertainer. But his track record isn't great either. There have been some studies that show following his stock picks would actually underperform. As a result, I'm going to pass on Jim Cramer's and Cathie Wood's advice. I'm guessing more of their personal wealth is built on media performance and deal making that results from that. Instead, I put more weight into investors that have proven long-term track records like Charlie Munger and Mohnish Pabrai. With this in mind, and as mentioned, my thesis for investing in Alibaba, it hasn't changed. I'll link to that video down below if you want to see more, and I'll also link to it on the screen. And I might soon gain a little more exposure to Alibaba with one of the top China ETFs, MCHI. Of course, there is risk, but the risk to reward is looking pretty good. Please let me know if you have any comments or questions down below, and once again, I'd really appreciate it if you just tap that like button down below, as well as subscribe for more free research. It really motivates me to continue spending my weekends putting this research together.